Hello. So hi guys. The objective of this channel is to understand finance. I am in no way a professional. These are my thoughts here. Um, these are not investment guidelines or any kind of thing. I am a student as well. I would love to hear your opinions. I am not saying I'm a professional here again. So yes, would love your thoughts on this, and that's I'm putting out in this world. Uh, no, I do DCF valuation because it gives me a kind of a number. It all boils down to one number, which I can hold on to before I invest or I look for investing. I don't know if you guys do that. I'm not saying you should be doing it. I'm just saying it works for me. It may or may not work for you. It helps it, right? If the valuation comes more, then then you invest. That's simple. If it doesn't, it doesn't. So yeah, today I'm gonna do it for 5-star business finance. And just before I actually get into what they do, I want to talk about the market. Now, this study by IFC was way back in 2018. We are in 2025 right now, which estimated that the total debt requirement for India's MSME sector is around 69.3 trillion INR. And it's surprising that only 16% of this is actually met by formal sources, such as banks and NBFCs, and the majority of it is from informal channels like family, friends, chit funds, and money lenders. So even with recent improvements and a very recent report, only 25% of the loans are now coming through formal sources, and this poses a very huge gap of penetration for NBFCs and banks in the India's MSME sector, or the lowest tier of the triangle, right? The business triangle, which brings us to 5-star business finance. It's a NBFC, non-banking financial company, and it provides secured small business loans to self-employed individuals who operate in India's semi-urban and rural markets. To be fair, they operate mostly in tier 3 to tier 6 cities in India, and the company follows a secured lending model where each loan is backed by residential property collateral. So usually the LTV is around 40%. So if you have if you want a loan of say 4 lakhs, your house will be as collateral, which may be around 10 lakhs, right? Like if it's 10 lakhs, the highest you can get is 4 lakhs as the loan. So it's a good LTV, and it's a good thing because for them these are life savings. They won't default on a 4 lakh loan for a and give away their 10 lakh property. So that's why it's good. And the typical loan ranges is from 3 lakh to 5 lakh. um, right now this year it's 3.58 lakhs on an average, and it relies on a relationship driven underwriting process. There are multiple risk aversion factors in the company and embodied in it to actually help them understand where to whom the loan should be given to whom to underwrite it, essentially. And they tackle this challenge by assessing the 3 C's: character, cash flow, and collateral, where they say they focus mostly on character because that is very primary. Would Is there borrower's intention to actually repay? And then we can talk about the different things like cash flow. What business they're doing? Is this How is this business doing? Would they be able to repay the loan? And then the collateral. And during the financial year, which is this one, your company's credit ratings, this 5-star business, were affirmed at AA minus, which is a very good credit rating. I would say anything in A is good for an NBFC who works in a tier 3 to tier 6 city, giving loans to of 3 to 5 lakhs for these people. AA minus is really stable. I would like to say that. Where do they operate? So as you see the India's map, they usually operate in Andhra Pradesh, Karnataka, Tamil Nadu, Telangana. So essentially South India, and they are migrating north as well. But as you can see on the right, this table shows us the number of branches. in different states. So right, so they have a lot of branches in South India. And if we talk about the other thing, which is the increase in branches, you can see 2024 they had 520 branches, 2025 748 branches, so that's like 220 more branches approximately in this year. 220 365, so that's like every there's a new branch every 2 3 days. But this does not guarantee revenue, right? We'll get to that. So depth of the company, they had to navigate a difficult financial year, that's what they say, particularly because of regulatory tightening measures and in response to concerns over leveraging in the retail finance sector. But the tax proposals are announced in the union budget, coupled with interest cuts cut by the RBI towards the end of fiscal year, are expected to stimulate consumption. RBI in its MPC meeting held in April 25 has also changed status from neutral to accommodative, which effectively means that going forward, absent any shocks, the MPC would consider only two options: status quo or a rate cut. So either the interest rate is going to stay the same or it's going to come down. And as I told you, the average market size, average ticket size is around 3.58 lakhs. And what we have, the AUM, which has grown by impressive 23% in 1 year, and the revenue by 30.56%. So yeah, that's a crazy growth. And the LCR, which is the liquidity cash ratio, was 354%. So essentially, for shorter loan repayment that they have to give to the other lenders that they take money from, um, it's 3.5 times essentially for shorter duration of debt repayment. On the right, you see they they have a diversified lender portfolio that they lend money from. There'll be bank term loans, NBFC term loans, DFI term loans, NCD securitization, ECB, and you can also see the depth in which how much of the loan is that way. Yeah, coming to the next slide. Yeah, so this is an interesting game. It's a numbers game. You can always point questions of how much are they defaulting on. If you see here, the AUM of 225, suppose total was 11,877 crore. 30 DPD, which is 30 days later, like 30 days late repayment, that is 90% of their payment is in the first 30 days. 7.8 in 31 to 90 days, and greater than 90 is very usually considered to be defaulted loan for all practical purposes, but still it's at 1.79%. So effectively we are saying that the defaulted loans is around 1 to 2%. If you also consider this part of this, maybe like 50 days, 40 days, you still get a very good number of 3 to 5%. So only 3 to 5% of their loans actually are defaulted, which is a very good number, and it's been saying the same, right? They say this is an increase because of the problem in the retail finance industry, which actually made a lot of people default, which overflowed into this business as well. If we come to revenue, again, this was 2195 crore, now it has risen to 2866 crore. So that's a very linear rise. You can see the impact of COVID, more or less. We'll have to see 2019 data as well. But even if we say after COVID, it's still rising very steadily. Profit after tax very steadily. Loan portfolio has been growing. They've been giving a lot total loans right now are 11,877, and loan disbursement has also risen a lot consistently, and it has gone down in 2021. That is for sure, that you can see. Now we come to the DCF valuation. Now there's a lot of data here. I would just like to focus on certain things. First of all, their debt to equity ratio is 126%. Cost of equity, which comes out through this, is 9.36%. After tax cost of debt considering company risk premium is about 7.45, and if you get calculate the market value of equity, market value of debt, you come to the cost of capital of 8.16%. Operating income in these 2 years were given to be this. I want to focus on free cash flow to the firm. I'm sorry, this should be 2025, and yeah. If once we have the FCFF, I want to come here. Next 10 years I have projected, we saw this is actually, we already saw it's like 20-25% growth in revenue, but I took like, let's say 15%. It's a cyclical business right now, the interest cuts are there, later it might not be there, so I want to take the worst case scenario. And yeah, it's a small cap company, it's growing fast, it's 15% growth rate right now. I think it'll come down, and by year 10 I think it'll terminate. So this is the growth rate I took, these are the free cash flows, and this is the present value of those free cash flows. So total value right now comes out to be 9087505. That's the value of the firm. I add the cash which they have and subtract the debt that they'll have to go. So the part of equity comes to this number, which is in lakhs. I'm sorry, I have not done it properly here. I would do it better next time. So yeah, and that brings us to the value of share, considering these number of outstanding shares to be 2835.49. Current price is 660. Now I know it's a lot. I think it's like 4-5 times. It's heavily undervalued. You say there are a few things which you should be taking into account here. The growth rate, obviously, it's a cyclical business. I know, but there's certain limitations to what I do. But I have played around with the number, and it's not a good thing to actually play around in DCF valuation. Otherwise, you'll lose your mind in certain things. You'll always tend to go to a number which is your preference. So for me, it came out to be 2835. Worst case scenario, even in this, is 2000 something something. So it is, in my opinion, a heavily undervalued stock. I would like to know your opinion on this, and this yeah, I think that's the objective of my channel, to understand where you guys come from and what do you have as your opinion. I am not saying I'm a professional here again, but would love to hear your opinion, or any other company that you want me to look at, or maybe you have looked at. And yeah, that'll be great. Yeah, I still don't know a lot of about finance, so I'm trying to learn as much as I can. This is something I came up with. So yes, thank you so much for watching this video. Let me know your thoughts in the comments.